name is Toby Heaps. I'm with Corporate Knights, and I'd like to welcome you to the third installment of a three-part series on acting for a net zero future now. This is the leadership segment, and we're lucky to have with us four real leaders from different sectors in joining us today. Just as a bit of a table setting, as most of you will know, the majority of the world's countries have now committed to achieving net zero emissions by 2050, including cities in Canada representing 32 million people, so the vast majority of our population in Canada, as well as the federal government. The reality on the ground, however, is that even with all these commitments made by companies, countries, and cities, by 2030, instead of reducing our emissions by 45% from a 2010 baseline, we're actually right now on track to increase emissions by 16%. So there's business as usual is still persisting, and there's a big opportunity to turn that around. The way we're going to turn that around is following the money. Specifically, the net zero pledges have to get translated into major investments and major procurement initiatives. When we're talking about that, we're talking about OPEX and we're talking about CAPEX. CAPEX in the neighborhood globally of about $100 trillion between now and 2050, about an additional $5 trillion per year using the IEA and Mark Carney's numbers. OPEX matters a lot. A lot of people think of companies in terms of their direct impacts. In fact, when you look through the supply chain of major companies, which the CDP did with 8,000 companies, you find that the supply chain has 11 times, or in many cases more than 11 times, the emissions in the supply chain than there are in the direct operations of the company. So supply chain is absolutely critical, and that's the OPEX budget. In Canada, we have about 38 companies who have signed up to science-based net zero targets, which is a nice start. 16 of those are signed up to the business ambition for 1.5 degrees, which is sort of the gold standard. One of the things we're hoping to get out of this event is just to showcase these four leaders as we walk through how they're really sort of taking the bull by the horns and taking the race to zero up a notch. And we're hoping that will inspire others to join the fray and to help make Canada more of a global juggernaut in this race to zero. So without further ado, I'm going to quickly introduce the four people we have on the panel today, and then we're going to jump into today's discussion. We have with us Adrian Thomas. He's the president of Schneider Electric Canada. We're proud to be hosting this series with Schneider Electric. Also proud to have Schneider Electric here is the #1 ranked company on our Global 100 Most Sustainable Corporations in the World list that was launched last year during the World Economic Forum for the 18th year in a row. We have Frances Edmonds, also a Global 100 company. She's head of Sustainable Impact, HP Canada. Gord Hicks, who many of you will know, was named the greenest CEO in Canada by Corporate Knights Advisory Board of Prominent Environmentalists, and he heads up BGIS, a large property management firm. We have Rob Simpson, who is the Director of Sustainability at Ivanhoe Cambridge, which is one of the more significant real estate companies in Canada with a bold net zero goal to be achieved by 2040. So thanks and welcome, and we're really looking forward to the discussion today. The first question is for all the panelists, and your companies, as we can see from this slide here, are all pursuing ambitious emissions reductions. What's the motivation? Adrian, let's start with you, and then Rob, and then Frances, and then Gord.
Thank you, Tony. Pleasure to be here. You know, I think the motivation stems from kind of four key categories that happen. So first and foremost, this is really part of our company ethos. This is who we are. It's part of our core values. And we actually started on this journey many years ago, about 15 years ago, when we adopted the UN Sustainable Development Goals as part of our corporate social responsibility values. But what we've seen in recent years, there's even more drivers which are kind of pushing for us to do more and more of that. Some of it revolves around legislation, but really market demand and resource efficiency. So everyone is looking still to do more with less, and this is very compatible with a sustainable organization. And certainly from a market demand, whether it's investors or customers also trying to decarbonize, those four items are really what's driving us to do more and to do better.
Thanks. Rob?
Hi, good morning or good afternoon. Sorry. Thanks, Toby. So at Ivanhoe, we've spent the last number of years really understanding what our carbon impact is, and within the greater, real estate environment globally, real estate contributes to a significant portion of annual GHG emissions. So we have a significant role to play in improving that. So we've spent the last number of months, 18 months to 2 years, putting our carbon strategy together and creating a pretty detailed roadmap that we're hoping is going to get us there. The ultimate goal is to be net zero from an operational perspective by 2040, with some interim targets noted there that you can see on the slide. The thing with us is the majority of our emissions come from the amount of energy that we consume in our buildings. So there's a pretty comprehensive plan that we've developed to deal with that and address that. And the impetus for it has been, A, we need to do it, and B, there's pressure starting to come from investors, from tenants, from partners, and from others that, stakeholders, internal employees, that really want to see significant and meaningful impacts and improvements in this area. So that's where we're at in the current process.
Thanks, Rob. Francis?
Well, I just wanted to say thank you to Adrian and Schneider for sponsoring this very important conversation, and great to see the mixture of businesses that we have here. The straight answer is there's no plan B, right? We're not going to survive unless we actually have a planet to live on. So that's a straight answer. But, we've set our sights on becoming the world's most sustainable and just technology company by 2030. And as a purpose-driven company for 80 years, we know our employees are very behind this and very aligned. But we've also been tracking how much business is coming in as a result of our sustainability leadership that we have today. The last 2 years alone, over $1 billion in business as a result of our sustainability leadership. So not only is it the right thing to do, it aligns with being a purpose-driven company and what our employees and investors want, but our customers are rewarding us for it. So what's not to like about this? And I'd encourage everybody who's on the line today listening in to be thinking about that it's good for business as well.
Thanks, Toby. Yeah, building on what everyone's already said, I think for us, this really makes a lot of sense for our business from, the perspective that as we waste less, as we are more efficient in terms of the operations. So from an energy perspective, a water consumption, and even waste diversion, ultimately our clients do benefit in terms of lower costs of operations. Not only that, we do see a direct correlation between the economy and the ecology. And so when we do things that benefit the environment, when we do things that benefit the reduction in emissions and waste, we actually do drive an economic benefit for the business. And that has, come in the form of additional business. It's come in the form of operating efficiencies, which ultimately drop to your bottom line. And beyond that, to Francis's point, we also have been able to attract and retain talent as a result of creating a great deal of pride in working for a global leader in the area of environmental sustainability. So on all fronts, this has worked very well for BGIS and obviously continues to drive benefit for our customers as we move forward.
And Gord, BGIS, unlike Ivanhoe, Cambridge, with Rob, you don't own the assets. You're managing buildings that other people own. And does that, some people say that it makes it difficult to really have a strong drive to decarbonize if it's not your asset. But is that what you're finding, or are you finding that you're able to, even though you don't have the hard power of owning the asset, you're still able to make a pretty big difference?
I think that whether you own or you manage and work on behalf of your clients, I think you still have to create business cases for the work that you do. And we're very fortunate. Our clients do see the benefit from a sustainability perspective and enhancing brand and image and so on to do the right thing. So they have an appetite to seeing those business cases. And then when they can see that those business cases that ultimately drive benefit from an ESG perspective are economically viable, then it really is it really is quite compelling for them to move the initiatives forward. So I think the effort is all in establishing a really solid business case to move an initiative forward, and that's what our teams are focused on when they when they're looking and identifying opportunities to support our clients' businesses.
Yes, certain information is pretty powerful when people can see the business case. Adrian, we're talking, there's a lot of emissions going across the economy. We have scope 1 emissions, scope 2 emissions, and scope 3 emissions in the supply chain in particular. Can you just give us just a bit of a, kind of a short course, just so everybody's on the same page, what we're talking about when we say these scope 1, scope 2, scope 3 emissions?
Yeah, Toby, and I think, this is vocabulary that gets thrown around a lot, and maybe not everyone has heard these terms, but I'll make it very simple. Scope 1 is really the emissions connected and produced at the company site or from the company itself. If you own your own generation, it would also include that, but it's really your direct kind of operational linked emissions. Scope 2 refers to the emissions from the energy you purchase. So if your electrical energy is generating CO2 emissions through however it is being produced, then that's what would be incorporated into scope 2. So scope 2 is what you produce. Scope 2 is what's produced by the energy you consume. And then scope 3 is really all the other emissions coming from the activities not directly owned or controlled by the company. And I think that, maybe we'll talk about this a little bit more as we go on, but I think that, scope 1 and scope 2 are kind of the natural places that people look, and this is great. We should start there and we should move forward. But I think scope 3 is another area, and it's a big piece. And I think you mentioned it in your intro, Tanya. It's like it can be as much as 11.5 times greater than the scope 1 and scope 2. And I think we need to be looking more and more in terms of what can we do to influence the scope 3 reductions, because this is really going to help us move forward in terms of helping combat climate change.
And beyond scope 3, there's a scope, a new scope that's been termed scope 4 emissions. And Francis, can you let us in on what that means?
Sure. So not to confuse people, this is not a formal definition. This is a nonprofit from the US that's trying to draw attention to the fact that we need to be very focused on how we speak publicly as companies and trade associations on the topic of lobbying and the work that we do to ensure that good policy is being put forward that's in line with a 1.5 degree scenario. And certainly we're seeing some organizations out there where they might have a net zero goal, but they're actively lobbying against legislation that would help us meet that. And prior to the call here, we were just talking about greening of the grid, for instance. That's not something that one individual company can do, but we can all lean in to say that that's a very important thing, and we should be lobbying governments for that. So it's how are you spending your lobbying dollars is the scope 4 concept.
Yeah, it seems like if we want to sort of separate sort of walk and talk, the net zero walk is really supply chain, and then what your CapEx is, and to the extent that you have political influence, what you're doing with that to create the more sustainable system.
Yeah, maybe if we could just show the slide that has HP's carbon footprint on, you can actually see that in reality. Yes.
Chris will pull that up in a moment.
Yeah, there you see. So this is real data from HP. We've been doing this since 2013. So you can see how big the supply chain is relative to products and solutions. And even, 55,000 employees in 70 plus countries is still only 1% of our total carbon footprint.
Interesting. And it's similar when you look at companies like Amazon. They have pretty advanced scope 1 and 2 goals, and also they have goals for their own branded projects, but for all the other stuff that gets sold on the Amazon store from third-party producers, they don't currently include that, and that's over 99% of the emissions. And it's interesting, some companies like Walmart, they take the perspective where they have Project Gigaton and they're really working through their supply chain. The folks that they don't own the third-party products on their shelves, and they're driving some of the emissions down. So it's when a company like Walmart can do it with the gigaton, that that shows it's possible.
So there's a couple of quotes there. One is, where is the next least cost ton of carbon reduction? And it's probably in your supply chain. And then the second one is an adaptation from a Ray Anderson quote, which is the fastest way to green your business is to purchase from one that's already done it. So that's that supply chain piece.
Yeah. Ray Anderson, as close as you can have a corporate patron saint for sustainability. He was pretty close to that. You've all set targets, and it'd be really interesting for people to understand. When you set a target, how does that actually work? What are the steps you take to figure out what your target is and then to operationalize it? Can you give us a little bit of an overview of that, Adrian, and then we'll open it up to whoever else wants to join in?
Yeah, Toby, I would say, setting the target is probably the easy piece, but because I think we want to be ambitious, right? And it's you set the target, and what we normally see is people set kind of midterm targets. So they're setting targets out, 5 years, 2030 is a very popular target. And then I think where the rubber hits the road is as you back it up and say, okay, what are the steps to how you get there? And so, certainly the first things people need to do is really start measuring. So to really understanding and measure the footprint is kind of one. So anyone going to set a target, I think the first thing they should really do is do an assessment and understand what is their carbon footprint today. There are different reporting metrics. GRI is one. So I think there are some measurement tools out there from different organizations, and I would really highly recommend to pick one that is well established. And then obviously from there, then you can start to identify what are your biggest emitters, and how difficult that would be to address and transition, and then how do you actually then improve it, and then long term, how are you going to kind of maintain it and make sure that you're achieving that. So from a Schneider perspective, I mentioned we started this journey about 15 years ago. I think people can do it a lot faster now. I think there's a lot of resources out there. You can join groups like RE100, EV100. So there's a lot of different science-based targets. There's a lot of groups out there that can really help. And then we break it down into, kind of 3-year plans. And we just relaunched in 2021, a new plan going forward, and we break that down as well. So to kind of recap, start by measuring your footprint and understanding what it is. That'll help you understand the steps to achieving your target. And then from a reporting structure, I think being transparent and publicizing it holds you accountable. So we publish our sustainability report every year. It's open to the public. Our shareholders see it. Fundamentally, it gets tied back to our executive compensation. So that really puts some meat. So it's not just, hey, we're saying we want to be a sustainable company, but it's really committing to those targets.
And there's the sort of the reducing carbon part of the target, and I guess there's some guidance there from the EU that works out to something in the neighborhood of a 7% reduction year-over-year net of growth of emissions. And then there's the growing the solutions part of your business. And it's interesting, you have a pretty ambitious target, 80% of revenue from green solutions by 2025. I just wonder how you compare how those two parts of the target pie go together in terms of reducing the carbon emissions and growing the green business.
I think it's a very supportive circle of work. So some of our suppliers are customers, and some of our customers are on the same journey. So what we're able to do is take solutions that we've developed to help us decarbonize our own organization, couple that with the technology we developed for energy solutions, and put it together. That's broadly speaking, when we're talking green revenue, is what are we putting out there that's a sustainable offer or commercial offer. But that's, you mentioned the Walmart Gigaton. So customers are looking for those solutions, and we help them do exactly what I say, to define, to measure, to improve, and fundamentally implement solutions to help them reduce their CO2 emissions. We're talking a little bit about scope 3, which is, it's well and good that we're going to take care of scope 1 and scope 2, but kind of addressing the suppliers. We've also made a commitment of for our top 1,000 suppliers, reducing their CO2 emissions by 50%. So that's done through engagement, working with them, sharing solutions that we have, helping them achieve those targets. And I think this is something that everyone can do just by starting with the dialogue with their suppliers, making it known that that's what's going to be expected. And you'll see that different companies start to adapt and start to bring on these sustainability practices so that they can continue to thrive in a market that's really demanding this sort of attention.
And from a business perspective, how is this working out sort of beyond the sort of environmental impact? Is this kind of growing up? Is it is it a hard slog or?
No, I would say it's exponential. Gord mentioned it in the beginning when he was speaking. There's actually, as you're reducing carbon, in almost all the cases, you're also being more efficient with the resources that you're using. So fundamentally, that's helping your bottom line. When you go to measure your carbon footprint, it starts with digitization. So if you're digitizing your measurements so that you can collect the data, understand how to measure that, that is also often having a secondary effect of being able to take other benefits of optimization by using that technology to operate better. So the whole kind of digitization journey goes hand in hand with decarbonization. So they really support each other on both sides, Toby, and it really makes it for a very strong demand in the industry.
So it's good business. You guys are you're not paying a price for this. It's a growth.
Yep.
Rob, a lot of institutional investors have come out with net zero targets, many in the sort of 2050 range, which is when we need the real economy to be net zero as well. So maybe running a little bit late. Ivanhoe Cambridge, significant real estate investor, set the target at 2040. I was wondering if you could kind of just walk us through how you set the target and what were the steps you guys went through to get to where you ended up.
Yeah, absolutely. 2040 for us seemed more logical because we felt the need to have some urgency behind this. We also feel that it's doable. It can be a differentiator for us in terms of tenant retention and all of the things that go along with that. Just quickly on Gord's earlier point around the relationship of the owner and the property manager. Historically, that relationship and the tenant relationship have kind of been, it's a bit of an old model. You had a landlord, you had somebody manage your building, and you leased out space and they paid the rent every month and that was it. It's a lot more involved than that, or it needs to be now. And that relationship on all three levels needs to evolve, and everybody needs to be aligned, and you need to work together to find mutually beneficial solutions in this area. But just to talk quickly on our targets, we set those, the process was fairly lengthy in terms of understanding our current emissions on a global scale. And then from there, we really broke it down into buckets on how can we expect to reduce by the amount we need to reduce by over that period of time in areas like energy efficiency. How much are we going to have to invest in sort of renewables opportunities and sourcing clean power? How are we going to evaluate technology solutions and how they might play into this? What are the drivers economically that are going to help push us in this direction? How do we tie it to internal annual remuneration? How do we tie it to sustainability-linked loans, which I can talk a little bit more about later? So there's a whole bunch of levers that you have to pull. I was saying earlier before the panel started that there's 100 things that have to go right in every asset for this to work, and they're not the same 100 things in each asset. So you have to prioritize where you have the best opportunity to achieve things quickly, and you do that by prioritizing high emissions regions that have high energy costs, for example. What are the other drivers, legislative or regulatory, that might help push you in that direction? And then you piece all those things together and you start to chip away at it. The one thing that we were very clear on is we will not know the answer to all of these problems yet, right? But you have to start somewhere. You create a good, strong plan based on the fundamentals and everything the best information you have at the time. And then the other pieces we'll fill in as we go. But it's there's unknowns for sure. And those will be solved as we progress, but you have to be comfortable with the fact that this is not clearly articulated from start to finish. This is not a straight line process that we're in, for sure.
So if you wait for everything to be perfect, you know, have perfect information, you might be waiting a while.
For sure. It'll never be perfect. Even by 2040, when we hope to be at zero, it won't be perfect. There will always be obstacles. You will always have to adjust your assumptions. You'll always have to adjust your plan based on, you know, what happens in markets that's going to allow you to be successful. So being comfortable with that and being okay with that, I think, is really sort of fundamental to being able to achieve this.
So Ivanhoe Cambridge is sits under the Casa Depot Glassmont CDPQ, the second largest pension fund in Canada, I guess close to $400 billion in assets, which has adopted a net zero target with a 2030 whole portfolio reduction of 60%, pretty significant. But when you look at the economy, from what I understand, the sort of this equity markets and bond markets kind of work out to 50 to 100 tons per $1 million invested, something like that. But the real estate portfolio, I understand, is much lower, like six tons or so, or, you know, depending on the portfolios you're looking at, but much lower than the broader economy, the way it's measured with scope 1 and 2. And so, does it when CDPQ sets a target like that, does it still trickle down, even though you guys are relatively efficient from a carbon perspective compared to other assets? Do you still have a mandate to do what you need to be bold?
Yes, yeah, absolutely. And we speak with CDPQ on a regular basis to update them on all of our objectives and make sure that we're in alignment with what they are requiring. And you're right, it's a smaller percentage of their overall investments from a carbon perspective on an intensity or $1 million invested basis. But that being said, it's probably easier, and maybe easier isn't the right word, but it's more achievable in real estate to achieve some of these goals than perhaps some of those other portfolios where, you know, they're not quite as advanced in what the opportunities are to do that. So where we can, we will do as much as we possibly can to help their larger objectives achieve what they need to do. And yeah, it's a significant contribution for us, for sure.
And just before we move on to Gordon Francis, you talked about sustainability-linked loans, debt. How do we harness the power of finance to really kind of drive accountability and focus using those types of mechanisms?
Yeah, sure. That's a big one, and that's one that we've spent a lot of time on in the last year of understanding what that would mean for us. And just last week, actually, we made a fairly large announcement that we've converted about $8.5 billion in corporate credit facilities to sustainability-linked loans, meaning essentially a better margin for achieving ESG compliance metrics. So, and opposite to that, there's a penalty, a financial penalty if we do not. So it's really yet another lever to pull to drive performance internally. And maybe where we can't always make a case through energy efficiency to do the business case, for example, if we can make a case that we're going to save X on a margin on an outstanding loan as a result of achieving these things, that's real dollars to us that eventually can then be reinvested in, you know, into other ESG or carbon reduction opportunities. So again, it's another piece of the equation that is, to us, vitally important as one of the, you know, one of several things, again, that needs to contribute to the way we approach this.
Interesting. And Adrian, you've had some experience as well on the sustainability-linked loans. Have you found that it can make the business case close the circle?
Yeah, I think it certainly helps, and I think that you know, this kind of impact into the market is just starting, and certainly I think in different areas, as I think there's going to be another dynamic, which is, you know, how it relates to carbon pricing and how carbon pricing starts to proliferate across the world. So I think that's going to be another dynamic to that. So I think right now it's starting primarily for the reasons that Rob expressed, but I think as we move forward, it'll be one of these balances towards some of the offsets and other things that people are starting to look at to start managing towards carbon neutrality.
It's interesting. The carbon price, Canada gets a lot of credit for having our $170 carbon price by 2030, but I guess it's more of a gas tax at the moment, and it's not even a particularly ambitious gas tax compared to other countries, sort of middle of the road. But if we can close some of those loopholes on the output-based pricing system, so I think the way it's set up right now is the biggest polluters, for the most part, are only paying, in the neighborhood of 7 to 10 cents per dollar that the carbon price would actually entail, because of the sort of low bar on the output-based pricing system. So I think in 2022, the government's going to look at that and sort of look at raising that bar, but that could drive a lot more motivation for the large industrial players, at least, to look at their carbon balance sheet.
I think in an ideal world, Toby, nobody in Canada will be paying that tax because we'll have them decarbonized.
Yeah, that's the ideal. Yeah, that's Gord, you work with a lot of large clients, including federal government of Canada, who has a net zero target for their whole building portfolio, and they're moving fairly aggressively, probably as aggressively as any large real estate holder in the world. Can you kind of walk us through how that kind of change happens in such a large organization, and how you actually kind of operationalize it from the right down to the capital planning kind of stage?
Yeah, for sure. First of all, the federal government, they are a phenomenal collaborator in this area, and we've worked very closely with them and in building a roadmap to achieve their targets. And ultimately, this roadmap, this carbon roadmap that we developed, we looked at all of their assets from a facilities perspective, and then we're able to start to prioritize and identify how much capital was going to be required to implement the necessary measures at each of their particular facilities. And then based on that, we were able to go back and start to identify the kinds of funding envelopes we would require over a 10, 20-year period to implement the measures that we had identified. So that was a body of work that we collaborated on with the professionals within the federal government. And then ultimately we started implementing, and that was something that ultimately was, again, a big effort, obviously getting the tenants on board and making sure that they were comfortable with the work that was going to be done. And I would say that I was quite impressed with the alignment of all stakeholders to ensure that we could move these initiatives forward. And we've made great progress as a collective team towards the objectives that we've set. And I would say that we're even moving quicker than I had imagined to get the work done. So again, the concept there was looking at, instead of replacing old equipment with new old equipment, we were re-engineering and looking for ways to achieve the performance of the building that we needed to achieve, whilst leveraging the advances in technology to move from a fossil fuel-based kind of solution to a zero carbon solution, and really future-proofing the portfolio. So that's what we were doing. And then the other thing that was interesting is we started to even do replacements of equipment, or everything from the investment of new technologies, whether it be passive solar technologies and so on, that might have a bit of a longer term payback. We were able to change the investment horizon. So on the investment analysis reports that would go forward to seek approval for funding, we were able to move from the traditional maybe 2-year payback to a longer term payback on those IARs. And that, of course, made it more feasible to move forward with the right solution. And the right solution was the solution that was the lowest carbon solution at the best possible cost. So that made a big difference. I think that looking at the business case a little bit more broadly and incorporating the cost of carbon was something that the government was an early adopter on. And I think to this day, I think more and more organizations have to start thinking more broadly about their business case, so that they're future-proofing their portfolio and implementing a solution that makes the most sense for their real estate portfolio.
Yeah, I guess it makes sense because if you're building a new building, especially, it's going to be around in 10 years. It's going to be around way longer than that. So if you want to be future proof, you better factor in the price of carbon. So that makes that's interesting. Also, I guess the federal government, is moving on its own portfolio, and then it's getting ready, I understand, to follow suit with what the UK did and require all the large suppliers to the government, using their power of procurement, to have a net zero action plan as a sort of a condition for doing business with the federal government. So that might be another sort of a motivator that we could see in the lead up to the budget in the spring. If we're looking at cleaning up supply chains, Adrian, Francis, you have spent a lot of time and have a lot of experience in this. When companies are looking to proactively decarbonize the supply chain, it's a big part of the equation. How are you tackling that within your organizations? And what are the major barriers that crop up as you're tackling that? Do you want to take the first shot, Francis?
Sure. And thank you for pointing out that that's where the rubber meets the road. And I think a lot of people do feel very intimidated in tackling the scope 3 because it just seems so insurmountable. And here's a list of all the issues that you're going to find in supply chain. It's not just carbon, of course. I think there's 3 big areas that I'd like to leave the audience with. The first one is that no one organization can do this alone. What we need as we tackle supply chain, because we mostly have very joint supply chains. If we look at the chip shortage and how many businesses that's impacting today, it's not just the tech industry anymore. So we need some radical collaboration. And I'll give you an interesting tension here. HP has a net zero by 2040 goal, but many of our large suppliers, pick Intel, has a 2050 goal. There's going to be some tensions there in how you move your supply chain along with you. And there's also this issue of tier 1, tier 2, tier 3, tier 4. How do you have influence with a supplier that you actually don't have a direct fiscal relationship with? It's easy to apply pressure to somebody that you're buying from, but less so as you move it down the chain. So again, that collaboration issue that's needed both within competitors and across industries to really focus on what we need to move. The issue is that we also need to do this. I think somebody else already said this. We've got to do this ASAP, right? This needs to be happening right now, as well as developing some of the better metrics and tools and resources to make some of these things happen. So we've got to collaborate. We have to do things yesterday. And we've got a whole new set of skills and tools and resources that need to be developed all simultaneously. And I don't want this to sound off-putting. I believe we can do this, but those are the 3 things that we have to be focusing on: urgency, collaboration, and getting these better metrics so that we can all be talking about the same thing with the transparency that's needed.
Adrian?
I think, Francis, those were like really great points, and I think the supplier of suppliers just kind of goes to show how the tail of supply chain is very long. But what encourages me is somewhere in that chain there is a direct supplier relationship. So that it is a connected chain. So I think really if we're going to reduce emissions across the supply chain, we have to make it clear, and I think many companies have done this, and Francis, that was a great example, is we have to make it clear, what is the requirement onto our suppliers. So we have to, make sure that they understand to do business with you that you're going to have some requirements on sustainability. Here's where I think we get some convergence of reporting structures will certainly help, so that there's a more common modality in terms of which we are measuring or we're verifying. But from our case, what we're also doing is engaging. So, Schneider Electric, we launched this thing called a climate change advisory services. So we use this service, which we have to do just that, to engage with suppliers, to create measurement, strategy setting. So, how it would be implemented, what is feasible from a renewable energy standpoint. And renewable energy is another interesting topic, because nowadays it's not only providing green, but it's also creating electrical resiliency. So, there's an added benefit moving in that direction as well, in some cases, depending where you live. And then in near term, there's also some carbon offsetting, but carbon offsetting will only get us so far, but from a short term approach that's there. So you want to make sure that your suppliers have a long-term plan in place. But I would say fundamentally, it starts with that understanding connection. And Tony, we didn't really talk so much about employees, but I think also making sure your employees are aware and understand what your targets and goals are, because in a large organization, you have thousands of employees making hundreds of decisions every day. And there has been a traditional kind of cost price sort of evaluation in many of these things. And you need to make sure that your employers are aware and understand that there's an economic, an environmental driver as well. And so that plays in, and that'll really make sure that they're taking the right decisions as well, because, we certainly empower employees to go take decisions. So having them part of that whole conversation and awareness and education helps them make the right choices to accelerate it.
And Adrian, Gord also mentioned about the employees, the employee morale linkage to leading on climate and how that can be pretty important for the business. I was wondering, do you guys have any kind of anything anecdotal or empirical to sort of that kind of bears that out, that employees are more wrapped up and motivated and productive because they're happy to be working for a sustainable company? I know LifeWorks, formerly Morneau Chappelle, their director of research, Paula, has done a global survey, and they have written about it for us, that there is a link between employee morale and productivity in companies that do better on sustainability, or companies that are perceived to be doing better on sustainability by their employees. Generally, there's some coincidence there, but be curious just to, from your perspective, working for a company that has got some pretty big accolades.
I can share two things. So one, from an empirical standpoint, I know Edelman, they publish a trust barometer, and so there are some statistics in there, and I think the rough statistics, something like 81% of employees expect their companies to have a commitment. And then for millennials, and those of you hiring people know how hard it is to attract talent in today's market. 64% say they won't take a job unless they have a strong ESG value proposition. So I think that's sort of the empirical data, Toby, or at least the empirical data that I'm familiar with. From an anecdotal kind of conversation, one thing that we've done at Schneider Electric as we revised our plans is one of our commitments is to have local commitments. Again, so at a local level, people are engaged, they know what's happening, and that kind of reinforces the mindset. But it also creates community and teamwork. We just recently had some high potential talent share with us different projects, and in those groups they can pick what they want. And there was a lot of topics around sustainability. So certainly it's top of mind within the employee population. So I think it, both the empirical data and then what I've seen in our company certainly supports that.
Interesting. The other piece we've touched on.
Hey, Toby.
Yeah. Gord?
Toby, I was just going to say, just on the supply chain piece, things that really needs to be thought through is how do we change maybe who we're buying from, or alternately the kind of solution through our supply chain that we're starting to embed in our operations. So I know that HP, for instance, they will, there's companies out there that on their behalf are recycling the used ink cartridges and that sort of thing. And it's a lot easier to take, the reused ink cartridges and then turn those into new ink cartridges. Undoubtedly, the environmental footprint associated with doing that is significantly lower than it would be from starting from scratch. So I think that's a really good focus area. For us, I'll give you an example. We recently, over the last 3 years, we've been moving to a bioenzymatic cleaning solution, and we've been moving all of our cleaning contractors to leveraging the BGIS green cleaning approach, we call it. And basically what we're doing then is leveraging these Canadian-based manufacturers of bioenzymatic cleaning solutions which they can in turn ship in concentrate form versus the diluted form of the typical toxic chemicals. And as a result, then we've gone from 12 shipments to thousands of facilities across the nation to one shipment. And we've reduced thousands of jugs, plastic gallon, 1 gallon jugs from the waste stream, as well as all the cardboard and so on. But think of the GHG emissions reduced as a result of having, several 100,000 less deliveries. This has been a huge game changer, if you will, for our supply chain in terms of how they deliver the service to our 34,000 facilities across the country. And so what I think and what I want to encourage organizations to do is really rethink how, not just what they're using, but how they're going about leveraging the supplies and services, products and services that go into their operational success. I think that's really important. And I've got a plethora of examples in that area, in that kind of a vein that really speak to thinking through from end to end. How can we actually change how we go about delivery of this service, or frankly, the manufacturing, getting the product to the manufacturer, if you will, and really dissecting that process.
Can you want to share one of those examples, Gord? There's some interesting ones you were telling me last night.
Yeah, so I shared the one on the green cleaning. That's a really straightforward one. The other one, in terms of direct carbon emissions for our customers, is really thinking through, okay, we don't want to actually put a like-for-like rooftop unit replacement on a client's roof any longer. What we're doing as part of our end-to-end solution is we're analyzing what heating and cooling at that particular facility, because those have changed as well. In many cases, the unit that was on there before, it was oversized, put a proper sized unit on top and save energy consumption. But beyond that, what we're moving to is more heat pump technologies and so on, and moving away from the fossil fuel kind of energy supply, so that we can reduce the client's emissions entirely. So go to, like, especially where you've got a clean grid, when you can electrify that particular product, that solution, you're in a position to eliminate the emissions. And so that's given where we are from a cost comparison perspective, it's very doable, and it's really nominal. If any incremental cost, it's nominal, because it's a capital replacement. You're going to amortize that over a 10 to 15 year period anyway. So it just makes so much sense from future proofing perspective of your portfolio.
Interesting. Francis, I saw you were raising your hand.
Sure. Just wanted to build on that, and thanks for the plug for closed loop plastics and inkjet cartridges. God, appreciate that. So this is speaking to a little bit about how we buy, again, bringing it back to procurement. And I think a little known secret is that if you, in the case of technology, if you choose to buy it as a service, which is the single largest thing you can do to contribute to the circular economy, the impacts of that on carbon are huge. And I'll give you an example. We know that if you can extend the average life of a PC, let's say by 2 years, you decrease its carbon footprint by 30%. Now, how do you buy a computer that has a longer life? Well, you buy one that's repairable. If you're buying with the lowest price, the tyranny of the lowest price, you get a functionally non-repairable device on your doorstep, which means when it breaks down, you're junking it or hopefully recycling it, but you're not getting that full long lifespan. So it ties so closely into procurement being a very strategic enabler of your carbon reduction goals, both in what you buy and how you buy it, as Gord has mentioned.
Interesting. We have a number of questions, and I had one sort of final question for all four of you. But just before we get to those, on linking pay to hitting these targets. Both Rob and Adrian, in particular, you have some some interesting case studies that you guys, your companies are running with. Can you just briefly share with us how senior people are being paid to deliver on these targets right now and how it's working out?
I can go first, Toby, just very, very basically. So, our top executive compensation is based on a salary plus a kind of a cash incentive or bonus. And so we publish what are the targets and what we're going to achieve. And then there's a percentage of that compensations, which is tied to the results that we actually publish to the target. So it's, there's a number of targets, so I won't enumerate them, but it's really that simple. What we have in our sustainability targets lines up with what the executives have in their targets, and then that modulates a portion of that cash bonus piece. And I think if you look at Schneider, I think in terms of our progress in terms of sustainability, it's certainly, I guess, one data point showing that it certainly gains mind share.
Interesting. And Rob, CDPQ has this, and then Ivanhoe Cambridge as well. But can you walk us through how it works and how significant a motivator it is?
Sure. Yeah, it's quite similar actually. It's a multiplier at the end of the year based on the objective that was set that is tied to our overall objectives long term. But beyond just executive compensation, it's for every employee. So it's factored into every employee's year-end remuneration or bonus. And part of that was to ensure that everybody in the company understands that they have a role to play with this. You sometimes get people saying, well, the work I do doesn't impact our carbon footprint, for example. But when you actually start to dig into it, it's clear that it does. And whether it's an investment team on what we're going to invest in, or an asset management team on how we're going to run properties, or legal in terms of regulatory requirements and contracts with partners and incentives and whatnot to partners in terms of their remuneration, there's layers again at every level that you can tie this to. So it was important for us that it become a company-wide initiative.
And I also understand from former executive Michael Sabia that there was you had a small upside if you hit the target, but if you missed the target, this was the portfolio manager side at least, you had a pretty significant downside in terms of, and that he said that nobody missed the target. Yeah,
it does go both ways for sure. And it helps, absolutely, again, and just another piece to try and push this along in the right direction that has, real impact on people and our returns. So it's important.
Interesting. So we have a few questions. I'll read them off, and then if you can, I think you all would be able to answer any of them, but we probably just, if whoever's most eager. So we have one from Andy, which is around electricity sources are slow to develop and slow to transition from carbon intensive. Maybe in Canada, we're already 90% of the way, but globally. And to a large extent, emissions are coming, as you said, Rob, from the grid. Are you confident that the grids are going to decarbonize quickly enough to hit the net zero goals?
We've done some modeling on that, and in certain markets we are confident. In others, obviously, there's work to be done. So how do you prioritize those? What are the opportunities to go outside of the grid in terms of renewables, and whether that's on site that we can perhaps do ourselves or partner with somebody else, or is it offsite in terms of a PPA structure? What are the global markets currently in place that would allow us to tap into some of those opportunities? Again, a lot of questions there, and it's a great question to ask because it is a vital component of all of this. But I would say the trend, largely speaking, is pushing in the right direction. And we have seen cases where there have been significant improvements in national or regional utility grids already. So we do expect that to continue.
Okay, we have a question from Parag Puri. Maybe Gord, this is a good one for you. He said, some industries grumbling about regulatory and transition risk. What do you think business should do, in this landscape of uncertainty?
Yeah, from my perspective, I think that businesses should establish the goals and so on for their respective businesses, and they should drive hard and align their investments that make sense for their business. I mean, none of us can so on piece and make sure that will accelerate the adoption of new technologies, will accelerate the adoption of investment in low carbon solutions, and so regulations that we want to see are regulations that really promote the adoption of these types of changes. Because if we can create a level playing field, we're going to see investments start to ramp up across the entire competitive landscape. So that's, for me, the biggest thing is create a level playing field with the regulations that you put in place, and that will drive the right kind of behavior across the entire industry. And so that's what I would like to see happen, actually, is in almost every sector.
That makes sense. Okay, we have a question from Bread Creek, Alberta, Dwayne Zaba. If you could do one thing to make a major positive impact on climate change, what would it be? And this is a nice question because it comes with 3 minutes left, and it was also my final question. So how about we go Francis first, Adrian, Gord, Rob.
I would change how procurement is measured and rewarded.
One thing I think would just be, just everybody getting on board with awareness. I think that, we can't do enough. This is the whole purpose of these sort of webinars is, so the one thing I would do is somehow get everyone to start.
Support the organizations that are doing the right things, and don't make it all about price. Francis' point, not all about price. So you got to support organizations that are doing the right things, because if you support them, they will be able to continue to drive efficiencies within their operation as they scale up. And that's just going to provide more and more cost-effective solutions from their part. So again, use your wallet to make to vote for the right kinds of businesses and the businesses that we need to see grow and develop into the future.
Rob, the last word is yours.
Great. I think for me, the most important thing in terms of one thing is to stop treating it as if there's one solution. I think it's really important to come at this with multiple approaches. There's multiple causes of what's happening, and there's multiple solutions, and it can't be framed in, a carbon tax only discussion or a regulatory only discussion. It's all got to work together, and those are pieces that will help contribute to the end result that we all need, but they're only pieces, and there's lots of them. It's figuring out what those pieces are and talking about them collectively and educating people to be able to do that.
Well, thanks. I'd like to thank all of you and everyone who joined us today, but all of you in particular for sharing your wisdom and also for putting your hearts into this and really leading by example and showing that it can be done, and there's no reason to wait. So really appreciate your leadership, and thanks for everyone for coming today. We'll be posting this online, so it'll be there for perpetuity, or as long as YouTube lasts. And hope you all have a good rest of the week, and Godspeed on the race to zero. Over and out.
Thanks so much.